The Hedgeless Swordsman here. I thought I'd look into a few companies which I've been requested to talk about. I own all of them. And first off, I think the most important thing any investor or speculator in the mining sector should think about is the fact that sentiment is the main driver in the short to medium term for any mining company basically. And like I've showed in videos before, this is a chart of Bear Creek Mining where you can see the sentiment oscillate from extremely cheap levels to frothier levels and then back down and up again and back down, and now we're here at levels where I expect 200% returns in Bear Creek Mining as it hits the next sentiment high. No idea when that will happen. I just know that this sector right now, especially the junior sector, and within that especially the gold juniors, are at brain dead valuations. These valuations should not really exist. If you believe the efficient market hypothesis, or if you believed, you probably stop believing it now, because this market is totally brain dead. This is almost like child's play when you realize just how much is actually simply sentiment driven. And to highlight the sentiment level extreme further, we'll look at this chart, which is the GDX to Bear Creek Mining ratio. You can see that it has hit this level or above the blue line here a couple of times or multiple times during the 2008-2009 bottom, and that was before juniors or miners overall went on to that epic ramp up until the top in 2011, and the ratio fell all the way down here during the top. Same thing in the 2015-16 bottom. And I remember I started buying miners around here, I think. That did not I thought this was cheap. I mean, this was a decade low basically. It did not, however, stop my portfolio from first going down 55%. But then it went up on a 600% tear in just 8 months, I think. And I actually bought some Bear Creek Mining near the lows, and that went up 600%. We saw this ratio hit during the flash crash. This was the best buying opportunity probably in at least 20 years, I would guess, because during this bottom, gold was actually around 1,050 or 1,100, and silver was around, I don't know, $13-14 per ounce. When juniors and miners overall went down 50% or more during the flash crash, gold was actually pretty flat. I'm just guessing here based on memory, around $1,600-1,700. So the business value, or the underlying business value for gold juniors, etc., stayed pretty flat, and it went down 50%. Again, makes no sense. Back here, at face value, at the moment, the gold and silver sector was basically worthless, because there was almost no miner on earth that was actually making any money. So back then, one could forgive the market for actually reflecting a pretty much worthless underlying business. This was not the case back here, and this is especially not the case here, because we have gold producers producing close to record cash flows. Think about that. I mean, higher margins in the last at least, or than any point in time, than in at least last 2 decades or so. So just based on that fact, gold juniors and to a lesser degree silver juniors should be reflecting the most profitable mining environment ever, and still we have this chart, and we have Bear Creek Mining down here, and sure, the silver price is not near its all-time highs. Gold is actually not far away from its all-time highs, so I can actually forgive some silver-focused juniors retracing down here perhaps or here, but to have gold juniors down 70% from their 52 weeks highs makes absolutely no sense at all. But again, that just goes to show that it has this decline here, and the 50 to 70% average decline in gold juniors has nothing at all to do with the actual companies themselves. It's just that there's no retail investors who dares to buy right now, or wants to buy because they're think they can make a living in the crypto space or whatever. And at the same time, you see insider buying across the board in many juniors, and you see financing's getting upside. So the smart money and insiders are actually, they actually have a calculator and realize that, oh, okay, these juniors are brain dead cheap. Sure, we'll put some money in. While, the typical retail guy is looking at this and thinking, well, there's no money to be made here because all I see is a downtrend, and they just project this trend, to zero basically, which they always do at every bottom. They always think it will continue forever, and the same people will be buying here because they think this will continue up and this will continue up, and etc. You get my point. So just to make things clear, the valuations you see out there, the stock prices in your favorite juniors, don't be fooled. The valuations are absolute bullshit. It's a joke, really. This market is probably, right now at least, it shows just how easy it is to beat the market because it's so sentiment driven. So if you have a value approach and keep yourself calm and stay rational, you should realize that there are no-brainer buys all over the place. And unless the gold and silver sector actually disappears, we're going to have one of these oscillations to a sentiment high again. And if it goes down first to this level or whatever, I don't really care. Because if it goes down 20, 30, 40, 50% more before it goes up 500% from the bottom, who cares? Okay, sure, it won't be fun to see more red for a few months, but as long as you hold up, we are going to reach this level in terms of sentiment. That's a given. Again, unless asteroid mining becomes a thing within the next 6 to 12 months, which I doubt. And again, the macro headwinds for gold has never been better. So the macro picture is great. The gold business is great. Silver business not that great. Juniors are pricing in like there will be asteroid mining happening anytime soon. So again, just to make things clear, I can't emphasize that enough. This market is total bullshit right now. Trust yourself. Trust yourself that you are a rational person actually looking at, okay, what do I think this is worth? And then you see that, wow, okay, it's actually your favorite stock is like 200% below what you would deem as fair value. Trust that instinct, because you're buying off of the worst investors in the world. There's actually people down here who can muster up a case to sell, and I would like to see that due diligence, and I would probably cry if I saw their long-term investing results. But anyway, okay, let's go through a couple of companies that's been requested. First of all, Eloro Resources. I mentioned this a bit in a recent video I did. Absolute no-brainer in my opinion. Again, this is not investing advice. I'm just, I'm just, laying out my case for it. I know my risk profile, etc. So first of all, competitive advantages, size. I mean, this is pretty much as big as it gets in terms of potential. Absolutely enormous potential. Grade, especially given it's a bulk tonnage target, especially the Santa Barbara breccia pipe. Personal expectations, let's say 300 million ounces AG plus, shallow levels. Grade, I don't know, maybe 60 to 100 grams per ton AG equivalent. That will not all be recovered, obviously, but there's some things like the tin component. They're using a very conservative tin price when they calculate AG equivalent. I think it's like 50% higher than the price they've been using right now. Tin is absolutely ripping and is at all-time highs. Again, depth for the Santa Barbara breccia pipe, and I put in this line here, $15.8 per share. I've seen one analyst report, and this was months ago, and that report estimated the value of the Santa Barbara breccia pipe alone at $15.8 per share on a fully diluted basis, I think. And that again excludes the central breccia pipe, the Porco breccia pipe, which they've just released the first hole from. And if you watch the recent presentation, it shows that there's a massive geophysical anomaly there, and they just clipped the edge. So who knows what the blue sky potential is there. Tin porphyry potential, which is even farther to the southeast. That might be a a big one. The eastern parts of the caldera, the extensions outside the caldera, I think they applied for more ground. I mean, to me this is about as no-brainer as it gets. I mean, if this is potentially fair value for Santa Barbara breccia pipe alone, and actually that report came out when they didn't know about the extension. So I don't want to throw out too big of a numbers, but just consider, okay, if the Santa Barbara breccia pipe is worth around here, depending on what risk adjustment you do based on, okay, this is Bolivia, etc. But then add the potential of central breccia pipe, Porco, tin porphyry. Yeah, I mean the numbers get crazy pretty quickly. Obviously, you're gonna get less value per actual economic value, since it is in Bolivia. But I mean, Jesus, if you're like, I don't know, 20% of blue sky would be a multi-bagger from here, I think. No brainer. I mean, if you look at where the valuation is, we're down here, same prices here, and that was basically pretty much before or around the time of the actual first discovery hole. And so during this time, they're gonna have drilled like 35,000 meters and are already talking about a maiden resource in Q1. So you're buying a maiden resource right now, or a coming maiden resource, which I think again could be like 300 million ounces AG equivalent plus, for the same price before they even, basically before they even started to drill it, when they only had like a hole or two. Incredible stuff. I mean, again, it's like when people say it's hard to beat the market, for sure they're just beating themselves, because it doesn't get more obvious than this in terms of risk reward. I mean, again, I don't understand most people. Anyway, let's move on to Goliath. Same thing, and I mean, you're gonna see a common theme of pretty much every junior being down, which again is pretty interesting, given that Eloro has probably less reason than 99.9% of juniors to actually be down, but it can't beat the retail money who's been selling because they're chasing cryptos and Dogecoin and hamster coin or whatever it is they're hunting. So and of course, I mean, it's our job. I mean, investing is really, especially in the mining sector, given that, I mean, there's, even if a junior finds a project, there's going to be like, what, 10 years before it actually becomes a business, let's say. So sentiment is going to be the main determinant of price at any given point in time. And all you need to know is that, you know, sentiment always changes. So I'm buying now, and I would have bought this if it wasn't all in, and I bought this, you know, simply front running the next sentiment high. I mean, this is all you really need to do, actually, which is kind of sad in a way. I know some people spend like weeks or months doing due diligence on juniors or miners, whatever, and at the same time, I mean, yes, that due diligence is important, but I mean, the amount of due diligence you would need down here. I mean, I recently bought a junior. Well, I had a call with a junior, I think, yeah, the CEO of a junior, and I was on the bid within like 10 minutes inside the call, basically. I just heard the valuation and like, okay, enough said. Yeah, so I mean, I mean, the tax loss season is almost over. So we've had, I mean, all these juniors that have gone down are artificially cheap due to tax loss selling. So when that artificial selling pressure is gone, will there be any more sellers? That's the, you know, question, because obviously valuation wise, we should already be up 100-200%. So I'm like, you know, trying to get as much dry powder as I can. Anyway, back to Goliath Resources, which was requested. Another, in my opinion, no-brainer. I've been talked about Goliath since, I think, around here. Was an absolutely no-brainer risk-reward back then. Outcropping mineralization, high grades, great widths, over a, you know, 1 kilometer strike length or whatever. And they basically have hit in every hole so far. And the you know, inferred mineralized zone, let's say, just keeps on expanding. So, you know, in my mind, there's a, you know, I might be wrong, but I think there's like potential for, I think blue sky, and blue sky might actually increase, but I think from like the shorebed zone, etc., I think there's actually like 3 to 5 million ounce potential, and if that proves to be true, this value creation trend is going to go on for, yeah, for a long time, because I mean, it's seasonal, etc., which is not great, but it is what it is. Competitive advantages, jurisdiction, British Columbia, probably at least one of the absolutely hottest jurisdictions on earth right now. So you know that if any success here is going to be worth a lot more than in any other jurisdiction. So if they find 2 million ounces of high-grade gold and silver, that might be worth multiples in the market compared to if they find it in Sudan or you know, well, Guyana or whatever. So that's extremely favorable for an investor, because if you're right, same amount of success, let's say, here compared to anywhere else will give you, you know, higher valuation. Predictable system, again, they've hit in basically every hole. Incredible, really. Not often you see that. So in terms of, you know, excitement or whatever, relative to probably, again, like majority of juniors at least, they're gonna have relatively few dusters, which is of course helpful given how we know the retail market is. They look at one news release and basically everyone is chasing the next news release. So it doesn't hurt that it's actually quite, you know, retail friendly in the short term, even though, I mean, even if they have dusters here and there, it's gonna, you know, swing like every every junior exploration story because they're gonna have some holes that are better than the others, and it goes like this. But if they keep hitting with kind of, you know, homogeneous hits, it might be a bit smoother. But at the same time, that didn't stop it from getting, you know, cut in half. I think this is, again, this is sentiment driven. There's no way that the actual value of the company has gone down 50%. I expect something like this when sentiment bottoms and, you know, we're out of tax loss season, and assuming the hits are you know, relatively okay on average of all the, you know, 30 holes coming out. I think we're going to start, you know, climbing again. Of course, we're in the boring period, so that's going to be a bit punishing because they can't really drill. But I think you know, painting with a broad brush, let's say. I think Goliath is going to go somewhere along these lines. I haven't sold anything, at least, because I like these, you know, growth stories where basically I have a case of, okay, what's my, you know, risk adjusted expectations within, let's say, 2 field seasons. I think it will be up here. I'm just, you know, guessing here, and that's without a really hot market environment. So okay, do I really care if it goes up or down all the way here? No, I'm buying because I think it will hit this point. There's no guarantee it will hit, but if you have that in mind, that you know, if you can see like the next 10 to 20 news releases and what, you know, your expectations are, if you net those out and you believe, okay, I think the market will realize that the value is around here after 10, 20 news releases or whatever, okay, that's your aim. That makes it easy to hodl, much easier. Most people obviously look at the next news release, and if it goes down, they are, you know, during these times they think, oh, they ask in the chat forums, why is Goliath going down? You know, has anything happened? No, bro. This is just sentiment doing its thing, and the ones that you know, on average will severely underperform the market, they're selling down here. They're the ones selling here. The ones that beat the market, they are buying. They're buying all these bottoms, and yeah, and still, for some reason, people believe this market is hard to beat. Anyway, a nice metals mix as well, silver and gold. You know, kind of a diversifier. Nice thickness and grade. Underground deposit as well. Forgot to add that. In, you know, the green utopia we're going towards, open pit mining in some places will be harder to do. So I think BC, extremely hot jurisdiction, underground mining even better because there will be less, you know, pushback from environmentalists or whatever. Yeah, I have a big position in Goliath. If I had any dry powder, I'll probably be adding here. I actually added for some family portfolios recently, I think. I'm biased, obviously. I mean, I own shares of Goliath, quite a bit of shares, and they're a sponsor. So same is for Eloro, same is for all I'm gonna go through here. Okay, let's look at Defiance Silver. Someone requested that. Same story here. Brain dead market is gonna do brain dead things. Going back to sentiment, we're at a low. Yes, price has gone down. They just, you know, kept on drilling their silver project with success. They have the TBLL project, which alone is probably worth more than 500 million, according to the PEA right now. I think it's actually more than that, given that copper is at 4 point something dollars, and gold is way higher than the PEA numbers. But, you know, cost inflation as well, so let's just stick with a, you know, even 500 for Tepal alone, gold, copper, great mix. I remember Pierre Lassonde recently said that a gold copper deposit is the ones he would like to find. And then they have the flagship silver project, San Acacio, and they've been hitting and drilling. So again, this is total bullshit. Total bullshit. When sentiment turns around again, we're gonna go something like this. Probably higher actually. Yeah, depending on news, etc. I mean, it's not like it's a guarantee, but from sentiment alone, we'll probably have, yeah, I don't know, 100 200% at least if they have some success. More than that, again, we're simply in a dip. One could perhaps argue that this is like, I don't know. I mean, some would argue it's a head and shoulders pattern. Is it possible? I mean, sure. Who knows? I don't really care. Again, it's not like you need every story to play out. I mean, anything could happen in Mexico at any point in time or whatever. It's just that if you're diversified enough at these cheap levels, the ones that have some black swan happening or whatever, they're gonna be taken care of the others that actually go up 400% instead. So I like diversification right now. Valuation 99 million Canadian right now, so you get a project worth on paper 500 million US plus the flagship San Acacio project for 99 million. I don't think you really need to know more than that to realize that this price level is absolute bullshit. Insiders, they seem to agree. They've been buying quite a bit of shares, and of course they would know. But I mean, this is why actually a good point why the junior sector is hard. Or why the junior sector is easy, it's just we didn't make it hard, because every time we have a sentiment like this, everyone thinks that something has happened with their project. And if there's something that never changes, it's that sentiment always changes. So we're gonna have this. I'm simply front running again. I'm gonna keep on hammering home this point, because this is probably the most important tool you can use, or point to actually get to be really successful in a sentiment driven space like this. That regardless if we go down first or how long it takes or whatever, we're gonna go up again. So again, you're simply front running it. And again, I mean, if this is the value trend, since they've been drilling and having success, etc., and de-risking and figuring out the geology of both projects, so the intrinsic value of the company has actually been increasing while price has decreased. So that means that the actual opportunity for an investor does not go up, does not go up in a linear fashion, but actually exponentially. So let's say the opportunity actually goes something like this, and of course it can go down even farther, but then just and if they keep creating value, it's just gonna even bigger a layup. Irving was requested as well. Same phenomena here. Absolute brain dead market. Amassed 14 GOT.V projects, have an alliance with Newmont Mining, which recently upped their position at over 100% higher. Competitive advantages, amount of projects. These are high quality projects as well. Probably, when I've stated this before in the forums, I think Irving probably has top, I don't know, in terms of sheer exploration potential in a junior's portfolio. They must be, they must, I don't know, maybe they actually have the best or second best or third best portfolio in the world right now. Negatives are of course that it's COVID and Japan, and Japan are very environmentally conscious. So pace, they only have one drill rig. They're trying to suck a pipeline of 14 projects with one drill rig, basically, sucking through a straw. But in terms of value, I mean, absolute brain dead. Basket case valuation. Yeah, alliance with Newmont for Greater Japan, flux credits, which could be a pretty good booster actually. That the host rock itself can provide some cash flow. Japan, even though it's hard to work, especially for foreigners, but Akiko, the CEO, is Japanese, of course. It's still a first world country. This is this decline. I understand the decline itself because Irving has been one of the most boring stocks in the entire space. And again, the ironic thing is that it probably, I don't know, in terms of, again, exploration potential, I don't know, should be perhaps up here, somewhere around here. So it's one of the most undervalued companies out there, I think, especially, the market will never discount 14 projects. But if it's like, I don't know, 20 million expected value for 14 projects, that's 280 million. Probably more than that actually. Well, some will obviously be higher and some will be lower. But the punishing thing for Irving has been the extremely slow pace. But they're drilling the big anomaly now at the Greater Omu project, so things might kick up. If they announce something, in let's say in the line of adding rigs or whatever. As soon as they are able to actually plow through this portfolio, the case will change immediately. Until then, people are depressing sentiment and nothing really appears to be happening, although they are of course doing work in the background. It's just that the optics are extremely bad. People get bored easily. People are already bored in the sector, but Irving has been more boring than most, so it's cheaper than most. Some patience in here. I doubt this is gonna look expensive within a year or two. Okay. Tombill was also one. Okay, my drawings disappeared. Anyway, I kind of remember the notes I put. So this is where basically I think it listed up at 30 cents. Let's say a peak here, and this was again when sentiment was favorable. It's down 75%. Okay, so again, has things gone to crap? Is the case dead or whatever? No, actually, around here they made the announcement that they had found the extension of the F zone from the hard rock deposit, like 6.23 grams per ton over 13 meters, high grade, very good widths. The market actually was so dumb that it didn't even respond at first. Nothing happened, and then I think Bob put out an article, and I put out an article too. So, that tells you everything. They basically have confirmation of the case, and the stock doesn't even move. So you know that sentiment was already bad back then, because that news release probably added, I don't know, value in lines of to at least the market cap, maybe more, and it didn't actually go up. And since then, since sentiment just kept going down in the sector, So did Tombill. So it's actually down. It's actually down like 60% from the discovery. It's I mean it's mind blowing. I'm down here with I have some stink bids in myself and across some portfolios. Jesus Christ! Again, when sentiment changes, and the market will dare to actually price in the fact that they made a discovery up here, well, I wouldn't be surprised to see it. Well, yeah, 200% should be relatively easy within, I think, 6 to 12 months. They'll probably need to raise some money, but if they have, they're also doing surface exploration work. If they actually hit on some of that, I mean, who knows what the value creation curve will actually look like. Let's say, okay, they made a discovery here, so let's say the value curve is something like this, and let's say they have some progress in the other targets, and it goes something like this. Yeah, then we're talking if sentiment gets better in let's say within 3-4 months, etc., and they have some success. I mean, yeah, I could easily see multi-bagger in Tombill in that case. Either way, it's brain dead cheap right now. That's all I need to know, really. And again, just from a swing in sentiment, these juniors will probably go up 100-200% or more without actually doing anything. And that's the beauty of buying these sentiment lows, because sentiment will go higher, and people who didn't care about discovery here will suddenly start to price in the discovery. Last one, Cartier Iron. Yeah, again, if might sound harsh, but for people who actually think this junior sector is hard to beat, I just tell you, all you need really is to have a functioning brain, have some eyes, and be able to do some easy calculations. Market cap right now at 8 cents, 11.2 million. Cash, I'm guessing here around 3. The value of their shares of Eloro Resources 7.8. Enterprise value, assuming this, 0.4 million. So for 0.4 million, you get their gold project. It shouldn't say projects. I think they have one. Maybe they actually have two. Anyway, they have they have a gold project in Newfoundland, which they're currently drilling, I think, and they have a 55% stake in an iron ore project. A pretty big project, actually. I mean, I think if I remember the transaction, it was valued at a few $1 million. So I would suggest that even though, I mean, the net present value of this iron ore project is, hundreds of millions, if not billions, I would think. They don't have it all, and there's potential problems with infrastructure. I mean, these are really, really big projects, and they're never going to finance it. But let's say, and the iron price of iron right now is in the dumpster. But I'm assuming it's at least worth 5 million, let's say. In that case, if you think the iron ore stake here is could be spun out, or at least it's worth like 5 million, you have minus 4.6 million then, and then you get the gold project which they're drilling. So again, if this market is so hard to beat, I would like to hear a case, a bear case for buying Cartier Iron at an enterprise value of 0.4 million. paying 0.4 for a gold project and 55% of an iron ore project. Who in the right mind? Obviously, no one would actually come up with a bear case, and still people. I mean, there's someone selling here. So I mean, that's all you need to know. Don't worship the market. Don't. I mean, people who claim the market is always right and don't catch a falling knife and the trend is your friend. I mean, okay. So I'm gonna pass up on this because I think it can get even more brain dead. I don't think so. That's the most stupid thing I've ever heard, and I see that stuff all the time. It just blows my mind. Again, not an investing recommendation. I have this, and I'm basically been stink bidding a bit across my own and some other people's portfolios. I mean, I hope there's still a few weeks left of tax loss selling. So I mean, if having some stink bids and getting all of this for free, what's the odds that you're actually gonna? I mean, you're gonna lose money if you hold it for 1 to 2 years. I think those odds are slim, especially since I think that the ELO holdings right now worth 7.8, and like I highlighted here, I think it's going a lot higher. So this is one way I'm actually playing Eloro Resources, and that's pretty good because if ELO just well, I mean, if it goes up 50%, let's say, I mean, that's going to cover the entire market cap, and I think Eloro will go a lot higher than that. Yeah, this has been a long video, but if I leave you with anything, and again, it's like, make up your own minds. I'm biased. I own these shares. I'm would be happy to buy more if I had any dry powder, really, and their banner sponsors. So make up, look into the presentations, etc., and form your own, opinion on what you think they are worth. But I would, with that said, I would still just leave you with the fact that, again, it's like, if there's one thing to keep in mind, it is that at these sentiment lows like we're seeing now, and except for the flash crash, I've never seen the market more brain dead. I mean, personally, I expect that my portfolio will go up 200%, let's say, within 12 to 18 months, without doing anything. I'm just waiting for this, basically. So without trading, just hodling, just buying cheap stuff like this and hodling until this ratio goes down and Bear Creek Mining makes a new sentiment high. I don't own Bear Creek Mining. I'm just using it as a sentiment proxy. It's like I could walk away from my portfolio right now without making a single trade, and I would be shocked beyond belief if I wasn't up some 200% within 6 to 18 months. That's not hard to do. It's just that the two main ingredients, which are hard for people to do, is first of all buy low, because everyone's looking at these charts and asking themselves, why has the Mr. Market is saying my company has become worthless. 100% bullshit. Don't trust the market at all. The market does really stupid things. That doesn't mean that you have to do stupid things. So if you find some companies, diversify like crazy if you have to. Just read some news releases, and if the value curve has gone up at least, and you see the price is down 50 to 70%, that's pretty much all you need to know, in my opinion, to get the conviction you need. And if you have a even better if you have a actually, long investment horizon. Like, okay, what do you think it's going to be worth in 2 years? And just keep that in mind all the time. Okay, I think they'll prove it up this, because then you won't care about this, and you will certainly not get demoralized. You'll just get more and more greedy. I mean, example, let's say I'm I'm 100% correct on Goliath. So okay, if you bought here, that's a 222% return. Great return, great return. But I'm down here and looking at, okay, I think it's gonna go up there. Whoa, okay, 548% return. That's, I mean, if you pull one of those off, you'll beat the market even if you have zero returns for the next 5 to 10 years, let's say. So that's the important thing. It's again, this sector is so sentiment driven that all of these down movements here, they're complete bullshit, complete bullshit. And the main ingredients are that you have to be able to realize that, believe that, buy, and if you buy here thinking it's low and it goes down more, not to get shaken out. It just means that the buying opportunity just increased. Again, it's like, okay, if you bought here and you thought it was cheap here, okay, in this case you would be looking at a 343% return. Okay, that's great, and that doesn't change even though it goes down first, because it would still, go down and then up. So a decline, even if you go down 50% first due to sentiment, if you're right, you're still gonna have that. You're still gonna get that 345% return. So and again, it's like if you bought here and you're looking at a paper loss, let's say, it doesn't get better if you actually sell down here. I mean, that's just making a mistake even worse, because if buying here is, let's say, a rational thing to do, buying down here makes even more sense. It's even more of a layup, and that also then implies that selling is becoming exponentially bad. I mean, your mistake by selling lower and lower, let's say. I mean, that's just, I mean, imagine if assuming you didn't buy something with even higher expected return. I mean, if you sold this bottom, etc., and you walked away from the market, assuming I'm correct, you just effed up a 684% return. You gave that to the guy that would be buying off of you, and let's say it was me and who could hold until it reached this. You gave me a 684% return because you were so emotional, such a herd mentality that you didn't realize that value had actually been going up, and you just walked away from one of the biggest layups out there. So again, one, have the fortitude to buy low and be prepared to see red before you see green, and then being able to hold on for dear life until you see the next sentiment high. Basically that. Buy low, sit until it's not low. That's if you do that across diversified portfolio, you don't even need to do that much in terms of due diligence. I know it sounds pretty weird, but that's actually the case, because this market is more sentiment driven than most, because it's so volatile. So buy low, have the fortitude and patience to simply stick it out to, well, I mean, higher than this at least. I hope you got something out of this video, even though it was kind of ranty, but I'm trying my best to actually teach what works for me, and how I look at markets. Take care and leave a comment if you want.